Welcome to the Business Interview. I'm Markus Karlsson. A fifth year of recession, more bailout talks and more austerity protests on the cards. There's little sign the crisis in Greece is about to go away anytime soon. Despite that, many would argue Greece has become a sideshow in the greater eurozone debt crisis. The spotlight appears to have turned to Spain instead. Does that mean the fears of a Greek eurozone exit has receded? Does Greece even matter at this stage? Joining me here to talk about that is George Alayanis, who himself is from Greece. He's also a professor at the University of Virginia Darden School of Business over in the United States. Welcome to the show.
Thank you very much. Thank you for having me.
Now, do you think that Greece, the Greek crisis and possible mishaps in the Greece crisis is a big risk at this point?
I think it's what's important is the signal that such an exit could send, and it could be very bad. Essentially, Greece is in some ways a much smaller economy than Spain or Italy, and the fact that essentially Greece was allowed to exit the eurozone will send a signal that is there a will to basically save the euro?
Within the financial community, do you think there is still the fear, a real fear that that Greece could exit at this stage? There's been so much talk of this Grexit.
I think some of those risks have subsided, and I think just looking at the euro recently, it seems to be not volatile, not quite where perhaps we would like it to be, but it's things have become a lot more subdued. Still, I think there's a lot to be done, and I think that there's some real work that has to be done in the next few months, figuring out what these new measures will be, exactly how you can basically fill that budget hole, and what will that mean for Greece? And I think that that's going to take some time.
But it seems as if you're saying that if indeed Greece were to leave the eurozone, it would be of more symbolic value. It would have a higher symbolic value rather than be a financial event.
No, I think it would be because it's the signal that is going to then carry out to the financial world that basically will say, okay, the euro may not really be there, and so that's why I do think that there is deep down. I think there's not a huge probability for this. I think the risks have subsided, and I think that we will hopefully see the effect of the reforms that are underway, and we will turn the corner.
All right, I want to play a clip with the Greek finance minister because he's spoken in the past week about the kind of damage that the Greek economy has sustained since the crisis started in earnest. Let's listen into that clip.
The recession is truly large. We're in the fifth year of recession, and altogether, so far, we have a recession of 20%, and it's expected to reach 25% by 2014.
All right, Storonaris saying there that the Greek economy will have shrunk by a quarter by 2014. That's a huge figure. Do you think it will stop there?
It's hard to say. It's hard to say. I hope that we will see some growth glimpses coming in not too long, because I do think that the impact of the austerity measures have been very hard, and you could see that walking on the streets.
You've been to Greece recently yourself.
I was there in June, and it's something that quite frankly has to be stopped and has to turn around. And I think that the hope is that there's going to be some way that some investment is going to come through that will basically give that spur of hope and growth in the Greek economy.
The Greek government has pledged to make cuts to a value of more than 11.5 billion euros once again in order to get access to another bailout tranche from the European Union and from the International Monetary Fund. Do you think, does that 11.5 billion euros, do they exist?
I don't know all the specific, how those figures were put together, but I can give you an example on, some of the privatization goals. And I think, it's clear that this is something that could potentially bring in some revenues, but it's not going to happen overnight, as you can imagine. I mean, we're trying to sell a house. It's going to take time to sell a house. You're trying to sell, a business. That's also going to take time. And actually, this is why I think the psychology in this case and the whole climate of Euro and Europe is very important, because if we do turn the corner, then some of those privatizations will be easier to realize, and in turn they will bring better valuations.
You've done a lot of work on banks and their role in the eurozone crisis. How is the banking sector doing in your mind at the moment in the eurozone?
Well, I will tell you much better than previously, and I think to a large extent that I think the ECB realized, and I think we have the experience of what happened in the US. I think if there is one message from the US crisis is that we need healthy banks to have a healthy economy, and if we don't have healthy banks, then it's going to be very difficult for any quick hope for growth. I do think that we have seen slowly some of the banks diversifying their portfolios. We have seen some of the banks become better capitalized, and I think we need to continue that.
When do you think we'll start seeing real results in the real economy as well? Because we have seen a little bit of stock markets, for instance, have been coming back. We've seen stock market values coming back, but still, it doesn't really reflect in the real economy. How long do you think that will take?
And it's hard to make any predictions. I think reforms are hard, and these kinds of reforms that I think some of them are extremely necessary. I think you need to in the end of the day, make the economy healthier than it was or it would have been without them. And so, for example, it's going to be painful to make the labor market more competitive, but I think in the long run, it would benefit Greece and it would benefit Europe. So it's going to take time, and it's going to take patience. And I think we have to couple this with support. We have to make sure that the camel's back doesn't get broken.
Spain has come into the firing line in the eurozone crisis at this stage, and much of the focus has been on the Spanish banks in particular. There is movement towards finalizing a bailout package for the Spanish banks. Is that going to help, or do you think that will be enough?
I do think, it's hard to say. We hope that, and I'm pretty sure that, this is taken very seriously, especially, again, having seen what happened in the US. And I have to say some of the proposals that I hear about creating a one supervisory authority that will look into the banks throughout the Eurozone. I would be supportive of that, because you do need to understand what's going on in the banks throughout the Eurozone if you don't want to have surprises like those.
When I listen to you, it sounds as if you are cautiously optimistic. Is that the right take? It is. I think that where does the optimism perhaps comes from is that my sense is that Europeans do want the euro, and there's, I believe, some data that supports this. I think there's also volatility around how much we really want the euro or not, but by and large, it looks like the Europeans want the euro, and the Europeans want a strong euro. And it looks like the world also wants a strong Europe, because without a strong Europe, there could be further repercussions for the global economy. So that's where my optimism comes from. The sort of the cautious comes from the other side, which is that you basically need to have you cannot make mistakes, and you need to have support from all sides. So
I think Europe has to work together to be able to figure it out. And I've seen some progress.
There have been some complaints, though, here in Europe that perhaps the financial community in North America and in the United States in particular, that they don't really see it the same way. They haven't copped on to the fact that there is a strong political will in Europe to maintain the euro. Do you think that is the case, first of all, and do you think that's changing?
This is what makes, I think, markets exciting. There's differences of opinion, and I think that it's hard to know exactly how the market interprets all the news and information that comes out on a continuous basis. And I think that I think, as I said, the ESM, the stability mechanism that has been put forth, I think that's something that makes I think the US think more positively about the future of the euro. I would think some other things that have been proposed also add to this, but I think it's still too early to say that we're out of it.
The jury's still out.
Exactly.
All right, George Alayanis, it's been a pleasure to speak to you. Thanks very much indeed for agreeing to this interview.
Likewise. Thank you very much.
And with that, we're going to wrap up the program as well. Thanks for watching France 24.